This podcast is intended for investment professionals only. All investing involves risk.
Hello, and welcome to this special episode of LGIM Talks, which is a client webinar we recorded on Wednesday when Donald Trump was declared winner of the US election. Our host for the webinar is Mark Johnson, LGIM's head of UK institutional and wholesale, and he's joined by a trio of experts based in London and the US to dissect what the election result might mean for investors.
Hello and welcome to this special webinar on Election Day in the United States. Whether you're in Europe or in the US, you're very welcome. And over the next half an hour, you're going to be hearing our views and our take on some extraordinary events that we've all been witnessing over the last few hours. Today, I think, is clearly one of extraordinary political significance. Donald Trump will become the first president to win two separate terms since Grover Cleveland in 1893. The 47th president will be the oldest in history, and he's clearly defied all political odds to win the popular vote. He's fended off assassination attempts during his campaign and over the last 15 weeks, a resurgent Democratic Party under Kamala Harris. So over the next couple of questions, we're going to be focusing on what we believe the key issues are. So first question will be, what does today mean for the US and for investors in its markets? Second question will be, how have markets globally reacted to the news overnight? And what are the likely economic consequences for us all? And then lastly, and perhaps most significantly, what are the geopolitical implications of today's outcome? I'm joined by three of my colleagues, Jason Shoup, who is head of investments in the US, based in Chicago, Tim Drayson, our chief economist in London, and Sonja Laud, our global CIO. We'd also, of course, as we always do, welcome your questions. Please send them through and we'll do our very best to answer them. But let's start with you, Jason. And interested, obviously, in your reactions overnight. You've had a very early start, I'm sure. And for all of the talk around borders and healthcare, one issue clearly emerged as dominant in the minds of investors and also obviously in voters, and that was the cost of living. As Bill Clinton said 30 years ago, it's the economy, stupid. And it would seem to us over here that Kamala Harris failed to persuade voters that she had a better narrative. Mr. Trump talks about a golden age. Is that realistic? What do we think the outlook is now for the US?
Yeah, good morning, good afternoon. Hello from Chicago. It's been a late night and an early morning, both combined here. I think you're right. I think, ultimately there were three issues, but the economy was probably the single largest one that factored in above reproductive rights and immigration. The question on the economy and why it was so relevant, I think, comes back to where the Republicans really made inroads over the last 3.5 years, right? Against a relatively strong economic backdrop, growth above trend in the U.S. for the last 18 months. It is amazing that the Democrats failed to really make a persuasive argument on growth and how healthy the U.S. economy has been and how resilient it has been. And I think at the kind of the center of that failure is really that the economic growth has been distributed unevenly in the U.S., right? You've seen this bias towards upper income classes as sort of capturing and being able to weather the cost of living crisis significantly better than where we've seen at the lower income spectrum. What the Republicans did amazingly is appeal to the working class vote within the U.S., and probably the thing that was missed by all of the polls going into this election was how well they did in expanding the working class voter base beyond just white men, but to one particular demographic that I think shocked everybody was Latino men as well, coming out strongly in favor of Trump and understanding that this is a broader working class, middle class issue that the Republicans were more persuasive on, and despite growth being in the high twos, right, in the U.S.
So cost of living was clearly critical. The other thing I wanted to understand is looking at the Senate elections, the Republicans seem to have taken control back from the Democrats. I think, if I'm right, the outcome is still uncertain on the House of Representatives, but it's looking possible that they would control all three arms of government. So what does that mean in terms of the legislative agenda? And where are the sort of checks and balances if the Republicans have the upper hand in all three?
Yeah, great point, great question. On the Senate, it does look like the Republicans not only have recaptured the Senate, but they'll have a majority in excess of 52 or 53. That's important because the two senators who from the Republican Party who have previously provided sort of checks along the way to the legislative Republican agenda are the senators from Alaska and Maine. They won't be relevant if the Republicans have a 53, or above Senate majority, right? So that clears the way for significantly more policy to pass, provided the Republicans win the House. And I think one thing we're not surprised at is that the House is taking longer to determine. I think everyone was a little surprised by how quickly we saw a presidential winner announced in this election. But the House is sort of living up to its longer tail of, when it comes to making a decision there. That said, when you look at polls, it feels much more in play. When you look at the betting odds, in the market reaction, it feels already decided, right? The one thing that's really worth knowing about the House here, however, is that the likely margin of control that the Republicans would have if they were to take the House in the next, few days here is going to be probably not much higher than what they currently have, right? So there will be a pretty slim majority in the House. And it could be possible that is the sort of checks and balances, if you want to call it that, on the legislative agenda. We'll be getting things through the House in a much larger group of interests that will need to be navigated over the coming 4 years.
Okay, thanks, Jason. Tim, let's turn to markets and the overnight reactions. So we saw Bitcoin soaring overnight as expectations, I think, increased in the likelihood of an easing generally around crypto. We saw that, the UK currently is up. We saw Asia up overnight in Japan. And obviously the dollar is strengthening significantly. So is this a risk on trade? Do we think it's going to have some permanency, or is it a sort of sugar rush after the exciting news overnight?
Thank you, Mark, and good afternoon, good morning from London. So I think if you told analysts we're going to get a red sweep, this is the kind of market reaction most would have anticipated. So you mentioned the dollar up, equities up, bond yields up. It's a bear steepening, so long-term yields have risen more than the front end. A bit more mixed outside of the US. So the question that you asked is, will it stick? And we know that the knee-jerk doesn't necessarily represent what will unfold over the next few weeks. And much will hinge on the implementation of the potential policy agenda. So, let's start with tariffs. I think this is the one we're kind of most concerned about. We know they're coming, but there's still a lot of uncertainties. And I'd probably note four major issues to still be resolved. So recall, Trump campaigned on 60% tariffs on China, 10% on everyone else. And I think the market feels that Trump is somewhat bluffing here. We don't know the level or the extent to which these tariffs will ultimately be imposed. I think the market will be watching really carefully who around him is appointed in those key trade positions, because that will determine exactly how hawkish the US tariff policy becomes. The second issue is the extent to which he has the authority to actually plow ahead with these tariffs. Now, the ones on China are probably relatively straightforward with executive actions, but the broader tariffs may well require congressional approval. And that's where, as Jason was mentioning, the makeup of the House and the Senate will be critical. Will there be enough moderates in there who perhaps temper the extent of those tariffs? Third, how will the rest of the world respond? I think we can expect some retaliation. Apparently, the European Union is already preparing some measures. And then finally, it's just what is the feedback from financial markets? So if financial markets give tariff policies a thumbs down, that may well then cause Trump to perhaps dial back on some of the most extreme measures.
And Tim, just on tariffs, I mean, so help me understand here. So if the US does apply tariffs on certain sectors or certain goods, could that not be counterproductive in terms of fueling price inflation anyway for US consumers?
So I think you're right. I would consider a tariff to be a tax on the US consumer. There's a question around how much gets passed on to the end consumer, but I think it will raise the price level. Now, whether that leads to more sustained inflation is a kind of secondary question, because you need the Federal Reserve to kind of accommodate the initial inflation shock and for wages to rise in response. But at least first time round, you get that squeeze on real incomes. So it's a bit of a stagflationary mix when you introduce tariffs. It raises prices and weakens growth.
Okay, well, I'm sure we'll come back to the economy, but I'm keen to get Sonja's views on the geopolitical consequences. We've seen world leaders rushing to congratulate Donald Trump overnight, and clearly we understand that he is going to be pursuing an America First agenda. So what are your thoughts on what that means for America's allies?
Yes, thank you, Mark, and good morning, good afternoon again from London. So before looking at the reaction function across Europe and actually globally, it's probably worth just considering what are the comparable outcomes or the comparable drivers behind the outcome of the US election versus the other main elections we have been seeing this year. Because listening to Jason, it's very clear that the themes actually are remarkably similar. Immigration has been a real fear factor across all the elections we've been seeing. We have seen voters really telling governments and incoming politicians, can you please fix the basics, right? It's the cost of living, it's the crisis, the impact this has had on particularly lower income households, and hence the backlash vote to say we need politicians that can really fix it for us. And then, of course, alongside it is pushing growth, but it's pushing growth that it's more equal, it's more evenly distributed. And it's very interesting that it has played out very similarly in the US. And of course, the reason why I'm saying this, it requires politicians, of course, to balance this then with a global agenda, i.e. the way how domestic issues will be met with the need to work, of course, with allies and look at the global trade agenda. Now, you've mentioned the most important points, and of course, Tim has focused on these already. What matters for Europe, and actually similarly across the Asian continent, tariffs, NATO, or security, and hence the geopolitical rhetoric. And it's if we start with Europe, it's very clear if there was a broad-based 10% tariff, it would be growth negative. And there is assumptions around probably a 0.5% reduction. But of course, there's a lot of caveats because, as Tim has said, that's been the rhetoric on the campaign trail. What at the end of the day will be put in place differs, although there's a very high chance that particularly auto exports will be to some extent be subject to tariffs. Now, NATO really will rattle the Europeans. So the rhetoric we've heard around the NATO, and of course we know that Trump has been incredibly critical around member states not delivering against the spending targets of 2% of GDP. Germany has always been in the focus and the center of attention. So that will come back. Of course, then the Ukrainians will look at this very carefully because the US are by far the largest contributor through either weapons or directly monetary support. So Europe will look at this clearly from those two angles. One is the economic impact potentially of tariffs, but the second one is clearly that they will need to add more spending to defense in order to at least be better equipped should the US shift their stance on Ukraine. Now, if you move to Asia, similarly, tariffs will be a very important point. As Tim has said, the tariffs on Chinese products are probably more straightforward and have already been enacted to some extent. But then, of course, the question still arises around, how willing will the US be to support Taiwan? In that, for that matter, the Japanese might have questions. So the overall arching idea around security and the role of the US in providing that security will definitely be a major focus point. But again, we know from a market standpoint, it will be mostly what is growth and inflation relevant, and how will this influence, hence the monetary reaction function around the world. We will definitely have an eye on the Fed because the more the Republicans are willing to extend fiscal stimulus, it clearly will have an impact. The bond market reaction probably is pointing in that direction.
And Sonja, in terms of asset allocation, has today's news reframed your internal debates you're having amongst the team at all?
The honest answer is not yet, because we need to see the actual policies being put in place. I think we have outlined all the key parameters we are going to watch, and that clearly is the magnitude of tariffs. I don't think there's any doubt that tariffs will come, but of course the devil is in the detail. So which sectors, which areas will be most impacted? What retaliation do we expect from those countries that are effective? And then of course the actual economic impact. Secondly is the potential inflationary impact. Point one, we've already outlined through the tariffs, which is again very difficult to fully judge because it depends on the pass-through effect. But then more importantly, I guess, is the longer term picture around the fiscal side and how willing the Republicans are to extend fiscal support, lowering taxes. So far, there has not been a lot of debate. It's been sufficient around the fiscal deficit and, of course, the debt levels. The expectations, I know, have been well flagged. So far, it has not stirred the bond market too much. We're seeing a first, sell-off today, which is a bear steepener. But I think unless we're seeing real detail on the potential policies being put in place, we might see a fading of those trades, because let's not forget the market has been incredibly positive into the election that happened today. We have seen all-time highs across equity markets. We're seeing a few sector shifts that are happening today just on the back of the news. We might see further shifts happening, but the real implications will only unfold once we know what the real policies are. And of course, that will depend quite a bit on the composition of the House of Representatives, because it's very clear if a clean sweep with probably a realistic majority would have far broader implications than a split government. That's a given, and we always knew that this is the way we would look at it. And it's interesting that the market is literally taking it for granted that we're going for a clean sweep. So we should make sure we wait and see. And of course, the way the market reacts, I think, was as expected on the back of a Trump victory.
The clean sweep and the House, I think one point there that's interesting is if the Democrats do end up taking the House against all betting and market behavior, it's probably because of something we're now referring to as shotgun voters, which means folks who have gone in and voted for Donald Trump and then turned their ballot in and walked away, and that's the only thing they voted on. And we that's a phenomenon that we're starting to see emerge in the U.S. in this election that we really haven't seen in the past. So keep your eye on that. That's the route towards the Democrats pulling off the sort of surprise upset on the House. Is you have a big concentration there. And then I agree that we're the next. Until year end, essentially, right? Cabinet picks usually start to trickle out anywhere from 2 weeks from now until 6 to 8 weeks from now, but before year end. We're in a weird time. Trump and the Republicans, he'll be able to say a lot right now, and there will be no other voices in the room, in the media, to potentially have a counterpoint from a policy perspective. So, the comments that Sonja made about from an asset allocation perspective are very true. It will, the details will matter. The cabinet appointees will matter. But for the minute, we're not going to have any of that information.
Jason, there's a specific question just come in on Treasury yields, and maybe there's a bit of a disconnect in terms of some of the inflationary talk earlier on tariffs. Is the market reacting in the way that you would have expected?
Yeah. I think the market's reacting in the way that a lot of pundits expected, right? They expected the initial move to be this bear steepener, right? And I think that's fine. But what we're seeing is a pretty accurate across all markets behavior that is in line with what the consensus expected. And that's sort of surprising. None of the consensus trades have yet been challenged, in the aftermath of the election results. I wouldn't be surprised if some of the consensus trades do get challenged over, and Sonja was alluding to this, over the coming weeks and months. One that bears a lot of watching is the yield curve and the steepness of the yield curve, because this next Fed decision is almost surely going to be a cut, right, of 25 basis points. I'd be very surprised if it was not. Every decision thereafter, if you are going to talk about things that could potentially increase inflation, even if it's a one-time effect, it's going to be against a backdrop of growth, deregulation, but potentially things that would argue for a less aggressive cutting cycle. If the market starts to smell, and I think we're a fair ways away from this, but if the market starts to smell and be concerned that there might not be any cuts in 2025 coming because of some of these policy shifts, then the yield curve is doing the wrong thing, right? The yield curve could very well twist in the other direction and invert, right? Or flatten and get back to inversion, right? And so I think that's something to watch very closely, and could be one of those consensus trades that gets tested first.
And when you look at the S&P 5, I saw an interesting chart the other day that said it doesn't really matter who's in the White House, it just goes up. I think with one exception in recent times, I think it was maybe H.W. Bush, but it was, generally speaking, it just keeps on going up and up and up. Do you think there's any truth to that? Do you see any reason to doubt that?
It's a good question. I think, provided things stay from an economic perspective relatively solid next year, I don't know why I would think that, earnings expectations would come significantly down and the S&P wouldn't be a good hedge against inflation risks and continue to rise. I do think leadership is at risk of changing quite dramatically within the S&P 500, right? We've seen so much of the Mag 7 carry the day over the last few years. I think it's undeniable that the Trump administration is going to have a much more skeptical big tech view, right? And maybe you already saw that in the current administration start to emerge of late. But I do think the winners will be different than what we've had over the last few years. And that's probably the most interesting bit of this, is to play the rotations and see how much those could extend. We've already seen small caps, for instance, and these sort of mid caps massively outperform today over sort of multinational large caps.
I'm going to ask you for your concluding thoughts. And I guess one from over here, Jason, is that hopefully, and I know that Kamala Harris has not yet conceded, or certainly she hadn't when we started this call, but we can hopefully expect an orderly transition in January, which I think is obviously a very positive outcome. But any concluding remarks or thoughts that you might have?
No, I think we covered most of them. I think, the surprises are good surprises. We got an answer quickly, right? From that perspective, when it comes to democracy, this is what seems to be a pretty definitive result, and I think that's what we needed as a country after the experience 4 years ago. So great to see that. I do think we touched on it here. Fiscal, it's going to start to come into laser focus over the next 3 to 6 months. It'll be very interesting to see, of all the promises that Donald Trump kind of rolled out over the last month when it comes to fiscal measures, a lot of discounting has gone on with whether those are actually going to be implemented. So I'm thinking of, not taxing tips, not taxing Social Security, right? All of these things. It'll be interesting to see if there's any pushback that emerges on that agenda from Senate Republicans who take a more fiscally conservative view of these things. But we won't know that for a few months yet.
Okay, thank you, Jason. Tim, any final thoughts from you?
Yes, from a UK perspective, America first means Britain at best second and probably a lot further down. And then the other problem is if US yields rise, which we're seeing already, that could drag up UK yields. And that's a double whammy, not only for higher borrowing costs, higher mortgages, but also the fiscal space, which started off quite slim, has now vanished for Rachel Reeves. So there's no prospect for any support from the fiscal side anytime soon.
Thanks, Tim. And Sonja, the last word from you, please.
Thank you. No, I think it's actually fascinating what we're seeing. If you take a step back and you look at the similarities in terms of the themes that have emerged, it's very clear that all governments have been handed quite difficult balancing acts, because it's very clear that they need to address domestic issues. They need to address that a vast part of the population is quite unhappy and feels that they're left behind, quite rightly. But at the same time, of course, and this is probably particularly true here in Europe, we're facing a very subdued growth environment, and we know the need for long-term structural investment is limited by fiscal headroom. Now, the US is in the enviable position that there seems to be more room to create fiscal headroom, whereas, of course, here in Europe, the market will not be quite as forgiving as we've seen it in the US. Yet, eventually, the market will look at fiscal sustainability around the world, and this is where this balancing will come in even more distinctly. And for us, I think, or for investors, what really matters is understanding how these policies will influence growth, inflation, and of course, hence the way central banks can deliver the price stability and the market stability. And that's not straightforward. And there is always a lot of noise around election days. There will be volatility. We're seeing the trades being put in place. But at the end of the day, to really understand the mid to longer term trajectory, it will come down what policies can be implemented and how this will influence the trajectory first domestically. And what makes it even more complex this time around, of course, is the geopolitical angle and the way the US in particular will engage with trading partners around the world, and the potential implication an America First agenda will have on those trade relations.
Thank you, Sonja. Well, I think that's all we have time for this afternoon. Thank you for everybody who's taken time to join us. It is often said with Donald Trump that you should watch what he does, not what he says. And we will be watching closely what he does over the next few weeks and months ahead of his inauguration in January. Today is clearly a seismic one for all of us on either side of the Atlantic. And we will be keeping you all apprised from an investment point of view in terms of what it means. But for now, thank you. And enjoy the rest of your days, whether you are celebrating, whether you're commiserating, or whether you have other things going on. We wish you well, and thank you again for joining us.
As a reminder, this podcast is intended for investment professionals only and shouldn't be shared with a non-professional audience. The views expressed in this podcast are those of Legal & General Investment Management Limited, as at the date of publication. This podcast is for information purposes only, and we are not soliciting any action based on it. The information discusses general economic, market, or political issues and/or industry or sector trends. It does not constitute research or investment, legal or tax advice. It is not an offer or recommendation or advertisement to buy or sell securities or pursue a particular investment strategy. Assumptions, opinions, and estimates are provided for illustrative purposes only. There is no guarantee that any forecast made will come to pass. No party shall have any right of action against Legal & General in relation to the accuracy or completeness of the information contained in this podcast. Where this document contains third-party information, the accuracy and completeness of such information cannot be guaranteed, and we accept no responsibility or liability in respect of such information, not for distribution to any person resident in any jurisdiction where such distribution would be contrary to local law or regulation. Copyright 2024. Legal & General Investment Management Limited is authorised and regulated by the Financial Conduct Authority. In Hong Kong, this material is issued by Legal & General Investment Management Asia Limited, regulated by the Hong Kong Securities and Futures Commission. For full terms and conditions, please visit our website. To find more content, you can